Hi, my name is Michael Zhao. I'm a research associate at Grayscale Investments. Today, we're going to be talking about crypto supply and why it matters. Crypto supply kind of differs from traditional equity markets. So the key difference lies in the predictability and variability of the supply changes. So in traditional equity markets, supply changes such as stock issuances or buybacks are relatively predictable and often are announced in advance. In contrast, crypto supply dynamics are far more variable and can be influenced by a large range of factors, including protocol upgrades, mining, and specific events like the halvings or other upgrades. There's a lot of variability in the crypto supply market. In terms of different crypto assets, they all can experience sudden shifts in supply due to events like cliff vesting, which lead to rapid market reactions. Our analysis showed that across the various Grayscale crypto sectors, there's been a general trend of token inflation, with the consumer and culture sector, utilities and services sector, and the smart contract platform sector experiencing the highest levels of weighted average inflation year to date. Looking at the data up to December 1st, 2023, we observed that the consumer and culture sector, along with utilities and services and smart contract platforms, saw the highest inflation rates. For example, these sectors experienced weighted average inflation rates significantly higher than the rest, with numbers indicating a clear trend towards increased supply over the year. In contrast, the currency sector, which includes Bitcoin, showed the least supply inflation, partly because Bitcoin has undergone most of its inflation in the earlier years. Not surprisingly, the results suggest a notable relationship between supply inflation and pricing trends. Sectors with higher supply inflation generally show a tendency towards lower price over the year. So our research focused on around 400 separate instances of supply unlocks, particularly looking at the events where 5 to 10% of the circulating supply was released. We found that price tended to be higher prior to the unlock event and lower afterwards. For instance, examining the price differences 30 days before and after these events, we observed a noticeable decline in prices post-unlock. This aligns with the market's anticipation of these supply increases. So the size of the supply unlock plays a critical role in its market impact as well. Our research specifically looked into this by comparing unlocks that released 5 to 10% of the circulating supply. Considering large unlocks, with those releasing smaller percentages, say 2 to 5%, larger unlocks tend to have a more pronounced negative effect on prices than smaller ones. For instance, when we analyzed the market reaction to these events, we found that prices were significantly more likely to decrease following a large unlock compared to a smaller one. This is likely due to the market's anticipation of the increased selling pressure that a larger unlock could bring. So what we learned from the data is that larger unlocks tend to affect price more significantly than smaller unlocks. This isn't the case with certain tokens though, and it doesn't apply to everything. So if you look at Chainlink's Link token, it is an intriguing case study because it defies typical market logic. In 2023, the Link token experienced 3 major cliff vesting events, where a significant amount of its supply was unlocked. Conventional wisdom would suggest that such a large unlock should lead to notable price decline due to its sudden increase in available supply. However, Link's price remained relatively stable. The tokens were unlocked to Chainlink Labs and other key stakeholders who had a vested interest in the long-term success of the project. This means that instead of immediately selling off the unlocked tokens, which would potentially depress prices, these stakeholders likely held onto their tokens or managed their sales in a way that minimized market impact. So while total number of tokens unlocked matters, who you unlock to matters sometimes more. So the takeaway for project teams is very clear. Strategic planning around supply unlocks can help mitigate potential market shocks. For investors, understanding the detailed dynamics of supply changes, especially in the context of size and who the unlock is going to, is crucial for making informed decisions. The crypto market is complex, but by dissecting these supply dynamics, we can gain valuable insights into potential market movements. For more information on this topic, as well as a variety of other crypto research topics, please feel free to visit grayscale.com. Thanks for listening.